we need to talk about HMRC.
His Majesty's Revenue and Customs, or HMRC, works with and for the UK's nations to ensure that tax rules apply everywhere.
Taxes, beautiful, lovely taxes. Aha, aha.
Most of you will know HMRC from those nasty minuses in your paychecks, or those letters through your door telling you that you haven't paid enough tax this financial year. But behind the scenes, they're cracking down even harder on monitoring our incomes, hiring thousands more staff and using AI tools and data mining in their investigations. Now, as a landlord, I need to stay compliant in my business and I need to understand what's happening to keep my business safe. And when I first heard about HMRC's new system, I actually got really worried. So I delved into this and I'm going to deep dive in this video so you don't have to, so that you can understand, number one, what HMRC's new surveillance system is. Number two, how it is going to potentially impact your business. And number three, what you can do in your business to survive the onslaught of the new HMRC system. So before we get into it, make sure to like, subscribe, and ding notification bell to not miss out on future uploads. So, HMRC's weapon of choice is called Connect. It's not a department, it's not a hotline, it's a machine. One of the most powerful AI surveillance systems in the world. It's a data-hungry, all-seeing network that knows more about the UK taxpayer than any government agency has ever known before. Just like the Terminator was programmed to go back in time to kill John Connor, this system was designed for one singular purpose.
It can't be bargained with. It doesn't feel pity or remorse or fear. And it absolutely will not stop. Ever.
And if you're in property, buying, renting, flipping, developing, you're right in the middle of its crosshairs. This isn't paranoia. It's not conspiracy. It's happening right now. And the only people who will survive the next wave of government control are the ones who understand it, master it, and use it to their advantage. So, what is it? HMRC's Connect began quietly in 2010, and back then it was sold as a way to close the tax gap, to catch the odd undeclared income or lazy bookkeeper. But here's what you don't know. Fast forward to today, and it's become a digital monster, an AI-driven super system analysing more than 20 billion lines of data every year. It doesn't wait for tip-offs. It doesn't rely on random audits. It simply analyses, cross-checks, and alerts. It's a silent investigator that never sleeps, never blinks, and never stops. And here's the thing that most people don't understand. Connect doesn't just look at your tax return, it looks at your entire life. So let's break down what the system actually sees. Land registry, every property you've ever bought or sold. HM land charges, every remortgage, restriction, and every charge. Banks, deposits, withdrawals, interest, and any unusual transactions. Mortgage lenders, balances, addresses, payment histories. Company's house, your directorships, your filings, your shareholdings, your council tax records, who lives where and who's paying what. The DVLA, cars that you own or sell. Utility companies, your energy use that proves if a property is empty or occupied. Rightmove, Zoopla, Airbnb, Booking.com, your listings, your rates, your occupancy. E-commerce sites like eBay, Etsy, Amazon, and Shopify. Payment platforms like PayPal, Stripe, Revolut, or Monzo. Even crypto exchanges under new OECD data sharing rules. And social media. Yes, even your Facebook photos, Instagram reels, or that new Keys post after completion day. All of it connected. That's why it's called Connect. And it doesn't just sit on servers. It thinks. It builds a picture of your life, where you live, what you earn, how you spend, and who you deal with. It can cross-check your income with your lifestyle, your mortgage, your company filings, your personal bank account. You can't outsmart it. You can only out-prepare it. Connect will disrupt every industry in the UK. And to find out how you can prepare for it in your sector, stick around till later in the video. Here at Progressive, we specialise in property. So let's take a quick look at some property-based examples. So we're going to get back to the video in just a moment, but first, you may have heard of our new global online education platform, Property.School. And this is your one-stop shop for everything property investing. Whether you're a beginner or a seasoned professional, Property.School has hundreds of hours of masterclasses for everyone. And don't forget, as a member of Property.School, you get 10% off all progressive training courses. So grab your place today, become a Property.School member now by clicking the link in the comments and start to change your life. Now, back to the video. Case 1. The accidental landlord. Bought a flat, moved out, rented it privately to a friend for £1,000 a month. They never declared the rent. Connect matched their mortgage payments and deposits in their current account and cross-checked it with council tax records. Within weeks, a letter arrived. Tax owed plus interest and penalties. Case 2. The Peterborough flipper. 5 houses in 18 months, each declared as a main residence to dodge capital gains tax. Connect pulled electoral roll and council tax data, and not one of them ever had his name on the bill. Result? HMRC reclassified him as a trader. £68,000 due, plus a hefty fine. Case 3. The HMO investor. Runs 4 HMOs under separate companies' names. One company doesn't file a confirmation statement, another misses a VAT return. Connect automatically linked to the directors and the bank accounts, and within days, the file was escalated. Case 4. The crypto landlord. Yes, it even affects cryptocurrencies. He sells £80,000 in Bitcoin to fund a refurb. Believed it was private. The exchange reports under the new crypto asset framework that Connect ties the wallet to his bank, and capital gains tax is calculated automatically. No human detective, no tip-off, just data. Cold, factual, and indisputable. So this isn't a property-only problem. This is everyone. Crypto traders, eBay sellers, Etsy creators, influencers, contractors, Airbnb hosts, even side hustlers shifting a few grand a year. Every transaction, every sale, every rent, every trade, logged, scanned, and stored. So if you think jumping ship to another income stream will keep you safe, you're mistaken. Connect doesn't care what you do. It just cares what you do on and off the record. But property investors, we're the easiest targets. Why? Because we leave footprints everywhere. Every deal, every mortgage, every tenancy. There's nowhere to hide. And that's why property investors have to be sharper, smarter, and bolder than ever before. So I know many of you watching will be feeling angry right now. You will be feeling outraged, and some of you might even be feeling really worried. And I have to say, I went through all the same emotions as well. This is government overreach gone crazy. Let's not sugarcoat it. This is government reaching into your personal life, into your private life, and monitoring every transaction that you make. And it's really shit. But here's the thing, it's not going away. The people who survive this storm are the people who understand it and know how to use the situation to their advantage to come out clean on the other side. So it's really rubbish, but we're going to go through this together. We're going to talk about what we can do to make sure that this doesn't have such a negative impact on us and actually turn it around to something that can actually be helpful to us. So here's how the pros win while everyone else panics. Digitize everything. No more paper chaos. Use software like QuickBooks, Xero, or Dext that links directly to your bank and accounting systems. Let technology do the tracking so you see the same numbers HMRC does. Separate your worlds. Never mix personal and business. Separate accounts, cards, and transfers. Because if you treat your company like a hobby, the taxman will treat it like a target. Align your narrative. Everything should match. Land registries, company's house, bank statements, social media. If your story doesn't line up, Connect will spot it before you do. Use structure smartly. Limited companies protect you from Section 24 and allow expense deductions and give access to lower tax rates. A landlord owning £60,000 personally might lose £24,000 in tax, but a company earning the same pays £15,000 in tax, which is £9,000 back in your pocket. Declare everything. If you've got a side hustle, Airbnb, eBay, coaching, rent to rent, file it. The system already knows. Hiding it doesn't make it invisible, it just makes it suspicious, and you'll receive a larger penalty when the Connect system finds out. Audit yourself annually. Pretend you're HMRC. Have you filed your tax returns accurately? Do you have expense receipts? Have you accounted for all income streams? Would your data make sense? And if not, fix it before Connect discovers it. That's how you stay free inside the system. Connect will split the property world in two. Those who fear compliance and fade away, and those who master compliance and scale. Which side are you on? Let's clear up one of the biggest myths in business. That tax is bad. No, tax is neutral. Tax is simply a percentage of your profit. You only pay it when you've made money. A bigger tax bill doesn't mean you're doing worse. It means you're doing better. If your tax went up, your business worked. Simple. So stop wishing for a smaller bill. Start building the competence to handle a bigger tax bill. Structure properly. Use companies. Invest strategically. Don't hide. Manage. Would you rather make £100,000 profit and pay £25,000 in tax, or make nothing and owe nothing? You see, most people pick the second option without realizing they've chosen poverty over productivity. Professionals understand that tax follows profit and profit follows structure. So yes, Connect System is watching. It's mapping your bank accounts, your mortgages, your rentals, your side hustles, even your social media. It is invasive. It is aggressive, but it's not going anywhere. It does not have to be your enemy. The microscope doesn't create the bacteria. It just exposes it. So if your business is clean, profitable, and structured, there's nothing to fear. Tax follows profit. Your goal isn't to shrink the bill, it's to grow the profit and manage the bill intelligently. Don't wish for a smaller tax bill, wish for the skill to handle a bigger one, because property isn't dying, it's evolving. The amateurs are leaving, the professionals are expanding. So keep your books clean, keep your structures tight, keep your focus on building, not complaining. Let Big Brother watch. While he's counting your taxes, you'll be counting your assets. While he's analysing your data, you'll be analysing new deals. And whilst the fearful retreat, you will move forward, because the system might control the data, but it will never control the determined. And in property and in business, determination still wins. So that brings us to the end of our video, and hopefully you have connected with some of the information that we've shared. Remember to like, subscribe, and ding the notification bell for more great content like this in future. And do check out our video on SaaS pensions, which will explain how you can access your pension money today, even before you've retired, so that you can start to invest and grow in your business. And also check out our video on why UK rent prices are so high at the moment and what opportunities lie within. See you in the next video. I made my money in property, but when I started in property, I didn't know there were so many different ways to do property. Over time, I learned the no money down strategies that would go on to make me worth millions. There's a link around this video that you can click on right now, and me and the team will help you on your property investing journey.